Everything is crashing today. We're going to break it down for you. There is a lot to go through. Before we get into it, I do want to thank our sponsor, and this is a special offer for you guys. OKX is running an exclusive affiliate offer where you can earn up to $500 in XRP rewards just by hitting a few simple milestones. Step 1, Tier 1, you can complete the KYC, you get $10 in XRP. If you go to Step 2, which is $100 on a deposit, you get another $40. Then you can bump that deposit and trade volume of just $1,000 and you grab an additional $100 in XRP. Best of all, for the heavy hitters out there, if you deposit and trade 10 grand, you can unlock a massive $350 XRP reward. This stacks onto all of this. So boom, you get up to $500 max earning, and it's paid directly out in XRP. So click the link down below. You guys are not want to miss this one. It is an awesome one. Let's just get right into it. I want to take a look first at how much is coming off the market. If you take a look at this tweet, this kind of hits it on the head, and that is 1.1 trillion wiped out from the US stock market at the opening. That is not all though, guys. We are talking about a conglomerate of wipeouts, and including Bitcoin down 3, almost 4%, gold down 2.2, silver down almost 5, the Kospi, Nikkei, Hang Seng, US futures all falling. And is this what is happening? We've got everything from heavy selling in AI and tech and semiconductors, and to now the Bank of Japan's recent hike is tightening global liquidity. This is something we've been talking about in terms of liquidity shifting into different markets. I'll explain maybe where this might be going and how you might be able to play this out. I want to go over to a clip real quick though. This next clip will break down a little bit of whether or not you should be hedging against the AI play or others. Take a look.
This is healthy pullback, but you should still buy them when they pull back.
I think so.
Yeah.
I think so. I still think it's an opportunity. Now, you can't have a whole portfolio full of them unless you're willing to withstand mornings like today.
So what do you do with the rest of it if your whole portfolio can't be this?
Correct. Well, watch today what works. You really want to have some what we call non-correlated positions in your portfolio to inoculate yourself.
All right, so he said something that I think is very, very true and also wise for any investor out there, and that is non-correlated investments. If you look at this peak chart right now, and you compare the AI Big 10, this is in the S&P, this is where we are right now. That's the correlation of the AI stocks, and there's only a handful that is holding up the top of this market, and that is a problem, guys, because the last time we saw those kinds of situations was back in the dot-bomb era. Now, I know these are all different kinds of companies. They have earnings versus blue sky. I get that. But the fact that they are isolated so much starts to make you wonder, is this maybe the pullback that everybody has been looking for? Is this the beginning of the pullback that everybody is looking for? One way that you could take a look at that is through CapEx spending. I want to go to a clip here because it will talk about how this is going to work out.
Time to bring out the pinking shears and trim the positions in the Mag 7 you might have to make room for the new beneficiaries of artificial intelligence. Leslie Mark, she manages $180 billion.
The primary driver of that is the amount of capital or capital expenditures that these companies have to spend right now, and that's impacting their free cash flow, which is why you're starting to see equity issuance, increased debt issuance, or capital raising. And this is a real change from the stock buybacks that these companies have benefited from, so shrinking their share count. Now we're starting to see, and Alphabet being the first one, increasing the share count. So a good time to take a little bit of profits and start deploying that into other areas of the market.
All right, guys, you know what that means. That's dilution at its highest level, and I think this is where investors are starting to go. And if you kind of compare this and just look at the expansion in bonds, this is the example that she's talking about, and that is these companies going out for money. They're diluting their assets, and of course, that means diluting you as an investor. This is part of why we're probably seeing a little bit of an early pullback. I wonder, though, if this is just the beginning. And if you think that is it, listen to what Gareth Soloway had to say.
Google, Amazon, Microsoft, Meta, these stocks are getting crushed. The breadth is now razor thin, and we're seeing that now in the charts. Lower high, lower low, equal high, lower low, but you're still making lower lows. This is very clearly in a downtrend. Look at Microsoft. All right, right there, this thing is topped. All right, now going to Meta, high, lower low. Look at this price action on Amazon, high, but look, it even made a lower low today. Yeah, Nvidia's down today, lower high, lower low. And look, bear flagging. This is going to break down. Going to break down, guys.
All right, so if you believe what Gareth is talking about, we are seeing the beginnings of a major pullback here as we continue to see liquidations coming out of the market. One of the ones that, of course, we've been watching very closely is SpaceX. SpaceX, of course, slid overnight, both after the MSCI slapped SpaceX with its lowest ESG rating. The reason these are important is the ESG ratings and also how the MSCI looks at different stocks. This is important because of how ETFs and different funds classify these stocks for investment. So with that happening, and remember, and I'll show you the SpaceX chart really quickly, because if you look at where SpaceX right now, this is on the 4-hour, this is the pullback right here, all the way back down to 150. It is very possible, if Gareth is right, that we could see SpaceX dropping back down to its 135 entry point. That would be a massive, massive loss on this stock if you were involved in this less than a week ago, which is when it was doing its run up. Let's just do the pullback right here from its top right there at 225, pulling back down almost 34% right there in less than a week. That is a major, major hit on SpaceX. Let me know if you guys ended up buying into that. I'm kind of curious. This is one that we would not go into. It was something that we were concerned about because of this. Now I'm looking at this rotation of capital that could be a big factor rolling out from here forward. And if we do see a major market correction, I think SpaceX could be one of the ones that leads the way. Here was another big hit, of course, to Elon. SoftBank CEO is now pushing back on the space data center plans. And his issue right there was, what's the point? AI data centers in space. I will say this, Masa-san is in many different companies that, of course, are going to benefit from hyperscaling here on Earth, I guess. It's weird to say that, but yeah, he's investing in those companies that do need that. So SpaceX is a bit of a compromise to that idea, and I think that's his pushback, but he may be absolutely right. It may take too long for Elon truly to get to space data centers, and that's the long play that you have to kind of compare. Does it take too long to get there for SpaceX? One other company to kind of keep an eye on is Micron, and the reason why, and if you guys don't know who Micron Technologies is, basically these are chip makers. They make memory that goes in almost every computer out there, which of course is being driven by AI. If we are seeing a tech sell-off right now driven by these earnings anxiety that we're looking at underneath the ETF structure, this is the concern that JP Morgan has right now. If you look at Micron right now, let me go over to the chart. This is what we're looking at in terms of earnings day, which is coming up here on Wednesday. It has an estimate of 20.83 per share. And then you've got revenue estimates setting at 35 billion. So if they don't hit this, and you're seeing a pretty good fall off right here from almost 12.30, pulling back down almost 25% to $1,000 a share, which is insane. This is something to keep an eye on because Micron could be leading the way in terms of the hardware side, the picks and shovels side of where AI is going. Is this giving us a little bit of an indicator of where this is heading? If you look at the marketplace overall, here's Zach Pandal talking about it, Bitcoin is stuck between stocks and gold. And you look at the trend line that's coming down right now. Bitcoin continuing to hold, but then a dip down. Right now, finally, the S&P starting to slide slightly. But gold, precious metals, absolutely falling off the chart right now with gold nearing 4,000 a share. If it dips under 4,000, that could be a major pullback in the market as we see liquidity starting to shift either to cash or prepping for another major rotation. Could crypto be part of that? I want to go to a clip real quick because this gets into how TradFi is looking as if Bitcoin is over. Take a look.
I don't know what to think about Bitcoin anymore. I wonder if Bitcoin was a little bit sort of the off-ramp for everybody that wants to have something a little bit more speculative.
Yeah.
Now that we have these big IPOs on one side, and then we have stablecoin on the other. And I just wonder, like, well, where is Bitcoin now? So that's just my new thoughts on Bitcoin. So I'm a little bit more worried. And is there going to be a $10 trillion company in 10 to 15 years? I find that debate and trying to figure out which of those companies might be a $10 trillion company sort of easier for me than figuring out where's Bitcoin going to be in 10 years.
So what's the answer to that question?
All right, so what he's getting at there is that the growth of these major markets, the likelihood of a 10 trillion, I think he's pointing toward NVIDIA. There could be others out there, including some of the other Mag 7 or AI 10. But I think the real question that you have to consider right now is the rotation. This is a TradFi guy that is looking at Bitcoin 50% off its high, and now is wondering, was that the off-ramp into alternative assets that are a little bit more speculative, which is really has been the AI play for sure. This is also starting to seep into the global macro. And the reason I say that is what's happening in South Korea right now. Trading has been halted in South Korea after stocks plunged 10% on Black Tuesday. And there's a lot of reasons why. MSCI is this index that essentially looks at the quality level. They design the performance of large and mid-cap segments in the Korean market. Normally, these kind of countries are trying to get into this, and it's very rare that somebody breaks through. And Korea was very, very close, but it was no cigar. That was what happened, and I think that is why we're starting to see this pull down. Korea fails again at MSCI developed markets threshold, aiming for inclusion next year. A couple of points they're trying to hit on right there. Morgan Stanley was talking about this, that it was thwarted. The government plans to include a concrete improvement task, things they got to get done to get this completed, to be able to be ready for July of next year. And this will be interesting because if they do make it, and I think there's a possibility, and I'll explain why, but the MSCI developed market has been postponed to June of next year. The key thing for them, I believe, is going to be their control of where the tech industry is going. If you look at the companies that Korea has, you've got to consider right here, and that is Samsung. This is the one that I think has the most opportunity to be able to bring them forward as a country into the MSCI. And let's just take a look at where Samsung's holding right now. Number 12 on the ranking, South Korea. Right now, 377% change in reference to Samsung. Look at the kind of growth that they've seen in market cap. This is from 07 to 26. They are on a blistering pace. This could mean some pretty major moves for Samsung. And if we do see them start to challenge Apple, this could get very interesting very quickly in how tech and the landscape of technology is dictated over the next few years. Here's another one right here. Private credit continues to hit or be hit in the markets right now. Another private credit fund limits redemptions. This, of course, is Apollo's flagship private credit, now hit with a 17% redemption request. Private credit is a concern. It will be one of the factors that could really thwart liquidity and availability of it. The individual investors reported roughly 2.4 billion of withdrawal requests. Think about that right now, 2.4 billion out of one fund. If this gets contagion effect, this could have a major effect on the market in general. So pay very close attention to what's happening there. Hood flips Coinbase. This is another one. And I think when you look at where Robinhood has been, they have been able to play both sides of this IPO mania and the crypto market. When crypto was down, the IPO mania was up. That's why we're seeing Robinhood continuing to fly, and Coinbase literally right now on life support at 164, down 46%, 142 in the past year versus right there up 38%, plus 29 in the past year. Those are the kind of numbers that we are facing right now. And it is a bit of a concern because I think as we see more companies playing the dual asset mandate, this is a key factor whenever you see capital rotation, and that's exactly what's been going on in the market. So as you can see, crypto is not the only way you're going to do this. You can see DeFi Llama, all of what we are seeing in traditional, which is mostly in the AI side. Again, don't get caught out there on the long. And I think Gareth, going back to Gareth's clip, I think he might be onto something. The real question is 20% pullback, is that enough in a major market like this? Because that would be catastrophic in general, and it might be the window that everybody's kind of been pointing to. Can you imagine what would happen in the midterms if the markets were down anywhere between 15 and 20%? That would be catastrophic, I think, for the Republicans going into the midterms. Speaking of what the White House is up to, you've got J.D. Vance on the Iranian trail, and he's out there trying to do something in terms of salvaging a deal. Listen to what he had to say.
And this is probably what we're most excited about as Americans, the Iranians have agreed to invite IAEA inspectors back into their country. That is a major milestone for the American people.
Vance says that they invited the inspectors back in. Then you have, of course, Iran saying, no, we didn't say that. It's not really the way we're talking about. They're disputing this. The MOU keeps current inspections unchanged and depends on future talks. Maybe that's what he was referencing. I don't know. I can't imagine he doesn't have facts there, but maybe he's interpreting it differently. Problem is that we seem to have this ping pong effect of White House says one thing, Iran says another. Another thing that's going on is Trump and his claims. He's going at this, which is 19 million barrels of oil flowing through the Strait yesterday. This was an all-time record, according to Trump. And I don't know who's telling the truth here, guys. We're hearing from Trump one thing, the White House another. Then you have all of these kinds of data points, and most of this has been ships that are sanctioned via Iran. So I don't know, guys. It's getting to the point where you just don't understand, or there's not enough information, or maybe there's too much information coming out of what these negotiations are yielding. But we are in a tight spot right now with trying to get this deal off the table. Perhaps the biggest issue that faces crypto right now is still clarity. This would be huge for the markets, because could you imagine right now if we were to get clarity coming through, or an indication that the Senate would let this go through, what that would do to the markets in a downturn? This could be the exact recipe for being able to see a rotation of capital, because all major media in terms of finance media would be talking about this. But this is the concern right now. There are a lot of things at stake. Major projects and companies are depending on this getting through, Ripple being one of them. So I'm surprised we have not, even though Ripple's been doing a lot to try to get this through, I am surprised that we are not seeing a fire sale coming at Congress right now, especially with this dropping to 43%. This is the lowest that clarity has been since January, when we were literally dead on arrival before coming out and actually getting passed through the Senate committee. This concerns me in a big way. One other thing that I want to mention, and that is we're going to be doing a video tomorrow. We'll play this on two ways, because there's a couple of angles that we're looking at and watching. You guys stick around for that one. Right now, we're looking at this market very, very closely. If you like this video, hit like and subscribe, drop a comment down below, and also join our free private member group. The link is in the description.